Good morning, everybody. What's going on, Gerald? How you doing, Shauna? Early morning crypto talk. We're gonna get started in just a second. Good morning, Lashana. Good morning, Benita. Good morning. All right, let me make sure I can pronounce this correctly. Narayana. Hope I said that right. Good evening to you, Gediminas in Norway. Aloha, Renee. Good morning, Ibrahim. Trish, good morning. Tiana, I see you. Mr. Ross, good morning. Sandra from Detroit, good morning. We're back for early morning crypto talk. We're going to get started in a second. Sandra from Detroit. Good morning, Jason. Hope you guys are having a good morning so far. It's Tuesday morning. I woke up early this morning. I had to take my son, drop him off at college, and it was cold, misty, traffic on the freeway. I was like, oh, I remember those days. Never again. Good morning, Nicholas from Finland. Hello, Brian. Good morning, Richie. Get started in just one more second, about 30 seconds. Guess what? You guys woke up this morning and you survived Bloody Monday. Not only the crypto market, but also the stock market that had its worst single day fall in history. Good morning, Karen, and I'm doing good, Narayana. Hope I'm saying your name right. Good morning, good morning, good morning. I like that, Sandra. Good money, good money. That's how you say good morning. All right, let's go ahead and get started here. There was, I did a late night crypto last night, but we didn't actually talk about any news. We had breaking news where I shared that the handcuffs had been removed from us. Everything that we had been hinting about for the previous month is now out in the open, that we're launching a new company called Cryptogenics. So you can go back to my Facebook page and see the live from yesterday. I also made a YouTube video out of it to get all those details. Speaking of Cryptogenics, one of the co-owners just hopped on, Mr. Mike Boggs. Welcome, welcome, Jay. We're having a special call this Saturday at 3 p.m. Eastern. It's going to be a founders call, meaning you're going to be able to meet the founders. 100% transparent. 100% SEC compliant. Passive income with crypto trading. And the most important of it all, getting educated in the crypto space. That's what we're bringing to the marketplace. So let's talk about some news here. Here's one. This is the week in review, starting from February 5th. Yeah, I like this image here. It's got like a tornado that swept through the land. And it wasn't just crypto. I want you to understand. The stock market lost 1,500 points in a matter of 10 minutes while Donald Trump was giving a speech saying that this is the best stock market time of all time. it was going on. They were debating behind the scenes, should they grab him and whisper in his ear? Kind of like how they had to whisper in George Bush's ear when 9/11 took place. But that's kind of how it was in the financial market. It's a worldwide thing. So you guys survived it. Congratulations. You woke up this morning. It's a new day. New trading day. Let me post a link to this article so we can cover this. It says crypto markets correct and rebound in volatile FUD-filled week. FUD-filled week, I call it a FUD-filled year. We're now 6 days into February. 1 month and 6 days into the new year, and this has been nothing but the empire striking back. The empire striking back. You see, 2017 was the year of Bitcoin and cryptocurrencies. It was a year that created so many crypto millionaires that you can't even count. That was Star Wars Episode 4, A New Hope. A real new hope for the people that's looking to retire, that's looking to walk off their job, that's looking to supplement their income, looking for a way out. Crypto provided for them. But some might say that the wrong people were getting rich. It got too big, too fast, and the powers that be couldn't control it. So when that takes place throughout history, it's not just the United States. Any power, any entity in power always does these 3 steps. The first thing they do is criminalize it. Make it illegal. Because if you make it illegal, in their mind, they are discouraging people from that activity because it's illegal. It doesn't stop everybody, but it discourages most people. The second thing they do to stop the people that it hasn't discouraged is to ban it, to prevent you from even having access to it. And when that ultimately fails, then they implement the third thing, something Ronald Reagan made famous. When he said, if you can't control something, if you can't ban it, regulate it and tax it to death, and then co-opt the technology and create your own that the masses will use. So 2018 has been Star Wars Episode 5, The Empire Strikes Back, and they've come out in a vengeance this year, 1 month and 6 days. They have struck hard worldwide, but like Bruce Lee says, it's just the river. They're throwing stones in a river. They can't build a dam to block the river. The river always finds a way, carved through the Grand Canyon. You have to know how to move around the obstacles, move around the blocks. So let's talk about this article here. Crypto markets correct and rebound in volatile FUD-filled week. For the week beginning January 29th, the price of Bitcoin collapsed from a high of $11,900 to a 2018 low of $7,830, according to CoinMarketCap. However, as we have witnessed during steep Bitcoin price corrections in the past, the price of Bitcoin bounced back again to close the week at around $9,000. Naturally, this deep correction caused weak hands. This is the majority of people, especially newcomers who bought in late 2017 to sell their coins, which amplified the drop. Okay, let me break that down in layman terms, what that means. The serious, I don't want to call them serious. They just got in early. The early adopters in 2017, they were buying in Bitcoin when it was, $1,500 to $3,000 a coin, all the way up to about September. And then the sucker started to explode past $5,000, $6,000 in October and November. And then it really jumped up to $19,000 in December. But when it started to rise, it started to get national media attention. And people had what's called FOMO, fear of missing out. So they see their friends and people getting rich off this Bitcoin stuff. They want in. So they started buying the Bitcoin when it was over $13,000 a coin, all the way up to $19,000 a coin. Now, those of us that's been in for a while, we knew the market was going to correct. We just didn't know when. So when the market corrected and started to go down, those newcomers that were buying Bitcoin at $14,000, $15,000, $16,000 a coin for the very first time, and they're seeing it drop down to $13,000 and $12,000, guess what they did? They sold because they felt they were losing. They didn't have education. This is my only biggest problem with the crypto market. See, the stock market doesn't have this issue. And the reason why they don't have this issue, because it costs at least $250,000 to $1 million to be considered serious in the game. And that automatically locks out 90% of the American population. They're not involved in stocks outside of 401k on their jobs. However, the crypto market, anybody with $10 and 5 minutes to set up a Coinbase account can be in the game. And the most dangerous are those people who actually do have money. They've got $40,000, $50,000, $60,000 they want to invest in crypto, and they have no knowledge or any type of education in crypto. So they drop $40,000 into Bitcoin when it was at $16,000. And then Bitcoin drops to $12,000. What do you think those individuals will do? They'll freak out, panic, and sell because they don't want to lose all of it. And by doing so, it facilitates more selling, more panic selling while the market is already correcting. So you have a natural 25-30% market correction, plus on top of that panic sell from all the newbies who don't even know what the heck is going on. That adds another 20 to 40% drop. That's what you're seeing. See, if you have basic understanding of crypto, just basic, you would know that the only way you lose is to sell. This isn't Forex. This isn't the stock market. All the gains the stock market has made over the past year was wiped out in 15 minutes yesterday. Gone. Wiped out. But in crypto, if the value goes down, guess what? You still own the coins. So if you just sit and hold, the coins will go up in value. Okay? The coins will go up in value. If you understand the market trends, if you look at the history of Bitcoin, you see a pattern. And this pattern has happened over and over again, especially the last 4 years. The same thing has happened at this time of year. So, what that means is, it shook the tree of all the weak hands. Those people who were not experienced enough and had no business being in the crypto game, but they had money. So they have money to play with. They're all affecting the market. So all we have to do is sit back, relax, and chill out. Bitcoin ain't going nowhere. But let me continue. I'm still on the first paragraph, right? So let me continue here. The price drop. Okay, now I just shared with you, and I forgot to state this. I am not a licensed financial advisor to be dispensing any financial advice. I read the news, I share my opinion, and give suggestions. You take that and do your own research and do what you will with it. But I just shared with you what I think was going on. Let's see what this article says. The price drop was caused by a mix of falsely reported news surrounding a possible Bitcoin ban in India, that's true, which has since been negated, rumors surrounding harsher than expected global cryptocurrency regulations, as well as banks and credit card providers making it harder or more expensive for individuals to purchase cryptocurrencies using their services. See, this is the system fighting back. They're attempting to ban and hinder your access. Fortunately, for season holders, the crypto markets bounced back again at the end of the week to remind us all that these clusters of volatility are entirely normal in the cryptocurrency markets, and that year-on-year Bitcoin is still up by over 800%. You're panicking when it is 1 year ago, Bitcoin was $1,000. Those that are panicking are the ones who bought it at $5,000, $10,000, and $15,000. Just relax. A correction like this is healthy for the markets. I shared this link already, Giovanni, so if you came in late, let me post it again. Here's a link to the article that I'm currently reading. A correction like this is healthy for the markets as it allows those who are in it for the long run to reposition themselves in the coins they like at a deep discount to their recent all-time highs. This week's contributions have been provided by, I don't want to go through all that. All right, Twitter CEO Jack Dorsey is in support of Bitcoin. Facebook and Twitter specifically have encroached into nearly every aspect of life and already include the functionality of transferring funds. These two behemoths have two very different stances on the issue of cryptocurrency. So we're looking at Facebook and Twitter. Facebook, on the anti-crypto side of the equation, has issued a broad ban on any advertisements featuring the subject. Is anybody shocked by that? I wasn't shocked. Let's see. The first recorded Bitcoin billionaires are the Winklevoss twins. What are they in relation to Mark Zuckerberg? Well, Mark Zuckerberg stole their idea for Facebook. So they're not exactly friends. So Mark Zuckerberg now wants in on the crypto space, since he already has a platform with over 1 billion daily users. He's going to look for ways to capitalize on it. So anytime you see a business entity shutting something down that's actually making them money, this is the hypocrisy of Facebook. Because they said they want to shut it down because of criminal and misleading ICOs and stuff like that, right? They're saying we're not going to take crypto money. Yet at the same time, they knew that thousands upon thousands of ads were created by Russian bots during the presidential campaign. They knew this, and they allowed it to happen because they were making money. They already testified on Congress about this. But all of a sudden, they want to clamp down on crypto? Why? What's the real reason? See, I have my own ideas, and my own idea is that Mark Zuckerberg ain't no fool. He's going to come out with something of his own that's going to rival the Winklevoss twins and take full advantage of the platform and the billions of people using it to make money off of crypto. You don't turn down Facebook ad money, which is their primary source of income, if you don't have a backup plan in place to double or triple what you would have made on those ads. That's just my own opinion I'm sharing on that one. So Facebook, Zuckerberg made the decision partly due to Facebook not wanting to be party to any scams or gambling schemes. That's a freaking lie. He just gave a flat, or you know what? How about didn't omit the full truth? Is that how you want to say it? Alternative facts. So although that may be true, what he said, it's not the whole story. In a whole paragraph, he just gave you the first sentence to the rest. Probably an inside memo. Release the memo, right? Twitter's CEO Jack Dorsey, on the other hand, tweeted a somewhat hesitant but positive position on cryptocurrencies. Instant buying and selling if you don't want to hold. If Bitcoin is now available to most Cash App customers, we support Bitcoin because we see it as a long-term path towards greater financial access for all. This is a small step. All right, Twitter is in the same business as Facebook, to make money. Twitter, he just said it. Why would we not add Bitcoin to it? We're going to make money. Yet Facebook, oh, we're worried about, scams and gambling schemes. How many scams and other stuff you see on Facebook ads on a daily basis? That's blatant scams. On a daily basis. And they do nothing about it. But all of a sudden, we got to stop the gambling of crypto. In a recent Unicron Radio podcast, Bittrex CEO Bill Shahara revealed that the US-based exchange would open up USD deposits and possibly dump Tether as one of the main pairings. The episode also touched on the history of the exchange and how it got started. When asked about opening up new signups, Shahara has this to say: yes, there is going to be a time, I actually think it's not that far away, when we are going to open up for global signups again. We will end up doing additional requirements, minimum deposits sizes, and things like that to trade, ensuring signups that are coming in are people who understand what they're doing. You know what? Stop right there. They want to ensure that people understand what they are doing. That's why we're launching Cryptogenics. You must have a clear understanding of what you're doing, or you will lose. Well, let me put it another way. Every single one of you will lose somewhere along the way in the crypto space. That's an inevitability. Inevitable. You're going to lose. If you're educated, you can mitigate where you lose and how much you lose. And so at the end of the day, you still end up in profit. But nobody makes it out not losing something. I know people who have made millions in the crypto space. They're not immune. They also lost some millions. They're just more in profit than they are in loss. But if you're not educated, one loss will have you running for the hills. That's why education is so important. Also, other news was buying cryptocurrency with credit cards now attracts extra fees. Other news, insurance companies looking to offer cryptocurrency coverage. I covered that yesterday. Facebook bans cryptocurrency advertisements. And I covered last week also, why have Bitcoin transaction fees fallen so sharply? So that link to that article is in the chat box. Now let's look at, something just popped up here. Brand new. What is this? NFL players have a new obsession. Bitcoin? I'll see how much time I have after this last article, or I might save it for tonight. But here, Senate releases testimonies ahead of crypto hearing. This is very important. So you want to pay close attention. I have not read this article yet. So we're going to read this together and see where we're going to learn something new. And I'll give you my own insight, because they always like to use this political jargon and nerd talk that makes no sense. So let's see if we can break this down. Senate releases testimonies ahead of crypto hearing. A day before a landmark hearing. A day with screaming headlines about the U.S. stock market's historic dump. Not to mention Bitcoin's 65% fire sale. The United States Senate released the formal testimony of chairs from the SEC and the CFTC. Heads of both entities will testify Tuesday, February 6th. That's today. Make sure you're watching C-SPAN. If it's being live, if it's being covered live. Today, before the Committee on Banking, Housing, and Urban Affairs to discuss the future of regulating cryptocurrencies. After today, they're going to have plenty to discuss. So, today is an historic day in the United States. You want to pay attention to any news coming out from the Committees on Banking, Housing, and Urban Affairs, because they have the head of the SEC and the CFTC, the Commodity Futures Trading Commission, to talk about how to regulate cryptocurrency in the United States. So, Senate testimony of SEC Chair Clayton. Bitcoiners are looking for any signs of positive news at this point. Set for a 10 a.m. It's 10:28 right now. This might be going on right now. 10 a.m. winter hearing Tuesday in the United States Senate, Dirksen office building, or that's 7 a.m. my time. So this already happened 3 hours ago. Two of the most powerful regulators in the cryptocurrency space will formally enter their testimony, titled Virtual Currencies, the Oversight Role of the U.S. Securities and Exchange Commission and the U.S. Commodity Futures Trading Commission. Oh, there's a link to this. All right, let me open up this link. Oh, wow. Here it is. The whole doggone... All right, let me put this in the chat box. Yeah, the hearing already took place today, 3 hours ago. So I'm behind. You see how fast stuff happens in this space? I'm behind on this. So let me continue. Both Jay Clayton and the SEC and the CFTC's Christopher Giancarlo will face lawmakers who are openly worried about the brave new future of cryptocurrencies such as Bitcoin. They're openly worried. This particular committee is chaired by Mike Crapo and ranking member Sherrod Brown and is made up of 23 members total, 12 Republican, 11 Democrat. In the U.S., each state, of which there are 50, receive 2 Senate seats, making the upper, more deliberative body a pound-for-pound most powerful institution in a nation of more than 325 million people. That a quarter of the Senate gets a chance to weigh in on the topic of Bitcoin and cryptocurrency less than 24 hours after one of its biggest crashes is bound to make news. Yeah, that's not good. They're going to use that as an example. See, this is why we need to regulate it. Look what happened. It's also a highly charged political year, as Republicans have a hold on the Senate majority heading into the November off-year elections, and both parties are looking for the slightest vulnerability in the other. Let's see here. Okay, I'm going to read this little part here. ICOs and related trading. Get ready for nerd talk. Coinciding with the substantial growth in cryptocurrencies, companies and individuals increasingly have been using so-called, all right, right there, know the language. They put it's not so-called, it is an ICO. So-called ICOs to raise capital for businesses and projects. Typically, these offerings involve the opportunity for individual investors to exchange currency, such as US dollars or cryptocurrencies, in return for a digital asset labeled as a coin or token. The size of the ICO market has grown exponentially in the last year, and it is estimated that almost $4 billion was raised through ICOs in 2017. So, who wants their cut? They sat back and watched $4 billion being raised in 2017, and their number one answer is, wait a minute, did we approve any of this? Did we get our cut? Did we get our taxes on this? We better get up in here and regulate these guys under the guise of, oh, we need to protect consumer protection. We need to protect the public. And they don't realize, or they probably do, that in your effort to protect the public, you actually hurt the public by getting in the way. And it's amazing that the Republicans are being hard on this. I shouldn't be surprised because, you know, they're in power right now, so they want the status quo to stay the same. But the Republicans are the first ones to talk about limited government interference. They don't want government getting involved in the businesses. Ronald Reagan, that's what he ran on in the 80s. Get the government out of the way. Let the free market do its thing. Yet here the Republicans are like, oh, we got to regulate this. We got to shut them down. It's like you're dichotomous here. So let me finish reading this. So-called ICOs. Typically, these offerings involve the opportunity for individual investors to exchange currency such as the US dollar. I already read that part. $4 billion raised in 2017. Note, this number may understate the size of the ICO market. and the potential for loss, as many ICOs trade up after they are issued. Most of them do. Now, of course, you've got some scammers out there that take the money and run. And that was the whole point. Yes, you've got them out there. These offerings can take different forms, and the rights and interests a coin is purported to provide the holder can vary widely. A key question all ICO market participants, promoters, sellers, lawyers, officers, and directors and accountants, as well as investors, should ask: is the coin a token, or token a security? Here we go again with this. Is it a security? As securities law practitioners know well, the answer depends on the facts, and this they highlighted. But by and large, the structures of ICOs that I have seen involve the offer and sale of securities and directly implicate the securities registration requirements and other investor protection provisions of our federal securities laws. You got to let that one sink in for a second. Because this is the beginning. We got to be prepared to know what's coming down. As noted above, the foundation of our federal securities laws is to provide investors with the procedural protections and information they need to make informal judgments about what they are investing in and the relevant risks. Chairman Jay Clayton of the SEC, 51, was nominated. This is another thing you guys need to understand. The SEC, the CFTC, they are not elected positions. They are selected. Okay? I talked about this yesterday. They have so much power for individuals that are not elected officials to impact our lives. It goes back to the Boston Tea Party. No taxation without representation. So, let me read this. Chairman Jay Clayton was nominated by President Trump over a year ago and assumed office last summer. The SEC had been largely hands-off. They've been hands-off in the crypto space and was notoriously reticent about its supposed role in Bitcoin's mainstreaming. No more under Mr. Clayton. Thank you, Donald Trump. The SEC became very active late last year, prosecuting bad actors and making more public statements than in prior years. It has slowed approval of what many believed would be key to the digital assets' success, Bitcoin ETFs. Again, you gotta, when something happens, you gotta follow the train all the way up. The SEC didn't get involved until Donald Trump became president and elected this guy as chairman, and then they're sticking their foot all up in cryptocurrency. Not to mention signing an overhaul tax bill that's taxing us to death on cryptocurrency. Just know who did it. That's all I'm saying. Whether you voted for him or not, this is the result. Chair Clayton's formal testimony, entered into the record of the Senate, and pro forma released to the public a day prior, is a Rorschach test for readers. Bitcoiners can take away a largely balanced, unsurprising approach from the SEC. The agency feels well entitled to regulate the space where it finds security. So the moment you called it a security, the SEC gets involved. Especially when it comes to initial coin offerings and other less tested leveraging mechanisms. I am particularly concerned, Mr. Clayton wrote, about market participants who extend to customers credit in US dollars, a relatively stable asset, to enable the purchase of cryptocurrencies, which, in recent experience, have proven to be a more volatile asset. But he didn't put the kibosh on ICOs altogether, insisting it is possible to conduct an offer and sales of securities, including an ICO, without triggering the SEC's registration requirements. Believing an ICO that is a security can be structured so that it qualifies. Okay, well, that's kind of good news, I guess. Now, here's a question. Should we leave it to the states or the feds? It's a good question. For those unfamiliar with the U.S. concept of federalism, regulation can, and often is, left to the 50 states to work out under general federal guidelines. Some feel this approach is in line with historic governance of the country, while others appreciate 50 laboratories of different methodologies. It's a version of subsidiarity, whereby the larger national government allows lawmakers closest to the ground their chance at solving whatever issue particular to regional concerns. On broadening federal law to blanket all crypto assets, the chair hinted to being open to exploring with Congress, as well as with our federal and state colleagues, whether increased federal regulation of cryptocurrency trading platforms is necessary or appropriate. For Wall Street, this could be especially good news, considering their penchant for uniformity and expedience. It's more difficult to say how Bitcoiners will interpret the notion, and I think it's too early. It's too early on this to say, because they can change the law at any moment. I think we just need to sit back and watch what happens on that. I don't have a comment on that. Furthermore, the chair assumes U.S.-based cryptocurrency trading platforms have elected to be regulated as money transmission services. His written remarks revealed these predominantly state-regulated payment services have not been subject to direct oversight by the SEC or the CFTC as of the present hearing. Yeah, because they're not calling it a security. They're registering themselves as transmission of money services. So yeah, you can tax that as income earned. But they're not calling themselves securities. Therefore, the SEC has no jurisdiction. But if the IRS and the government and the SEC says, no, we're going to call it a security, then they're going to stick their heads in. That's what the state of Texas did. State of Texas says anything dealing with cryptocurrencies is seen as a security. And you have to be registered to be a security. And that's why Bitcoin will always forever be banned in Texas, because to register as a security, you also need to divulge certain information like where's the company headquarters? What state is the organization registered in? Who are the founders? Who are the owners? There is no owner in a decentralized network, open source. There is no Bitcoin headquarters. There is no Bitcoin CEO. And the reason why Texas wants that information, because they want to be able to hold somebody accountable. And if they can't hold anybody accountable, then they're going to say, no, we're not letting you do business here. So let me continue. Significantly, the chair has, especially in previous published comments, wondered aloud about which cryptos fall where on the regulatory scale, and Bitcoiners have largely appreciated his awareness of the distinction. In a market where anything is called a cryptocurrency, even a project with only a PDF and no blockchain, the SEC's head seems to understand they're not all equal. There are cryptocurrencies that, at least as currently designed, promoted and used, do not appear to be securities. Oh, that's positive. I lost my train of thought. Someone was blowing me up here. Let's see where I missed that out. I'll just read it again. There are cryptocurrencies that, at least as currently designed, promoted and used, do not appear to be securities, he clarified. Encouragingly, he briefly outlined how determining what falls within the ambit of a securities offer and sale is a facts and circumstances analysis, noting how utilizing a principles-based framework has served American companies and American investors well through periods of innovation and change for over 80 years. Bitcoiners might be overjoyed to learn the SEC considers crypto possibly one of those periods of innovation. Now, careful not to come off Panglosian. I'm going to have to look that word up. Panglosian. Mr. Clayton takes into account the very real concerns of lawmakers going forward. However, these warnings are not an effort to undermine the fostering of innovation through our capital markets. Yes, it is. Don't lie. Yes, it is. America was built on the ingenuity, vision, and spirit of entrepreneurs who tackled old and new problems in new, innovative ways, he stressed. Then why are you doing what you're doing? Because what you're doing is giving our enemies, our competitors, a very big competitive advantage when they don't even want to do business in the United States because of our rules and regulations. Who is getting hurt and who is winning? When you have an entire generation of people in other countries leading the way on this, and here we are in America, it's like we're just begging for you to move out of the way so we can do what we do. You are getting in the way and stifling ingenuity, vision, and the spirit of entrepreneurs. The 71-page doc, now that's my own opinion, okay? That may not be factual. I'm just reading between the lines here and based on, you know, their actions. I don't listen to what they say. I watch what they do. The 71-page document has much more to say, and a great deal of it will be brought out through questioning by lawmakers. But at least for now, Bitcoiners can rest easier knowing no imminent Chinese crackdown is coming to the United States. I don't think that's ever going to happen in the United States, like in China. It's easier for the communist countries to do that. But this is an election year. So I seriously doubt any politician is going to kind of sign their own death certificate on this by wanting to be completely negative on it, unless they are backed financially by the bankers heavily to represent their interests and not the people. South Korea proved that. The people did a 200,000 people petition, and they called out politicians that said, you will not be reelected. And all of a sudden, South Korea changed their tone real quick. So we will see how this unfolds in the United States. That's all for the information today, guys. This is very important information. For those of you that came on late, you definitely want to go back to the beginning to hear this, but I will post the link again for this, and also the link for, where is it? Oh, where did it go? Oh, here we go. The direct link for the Senate, the oversight role of the U.S. securities. Direct information. Like I say, I back up what I say with facts. And this is why it's so important to be crypto educated. My education never stops. I'm learning something new every single day. And our educational platform, Cryptogenics, is going to help you along the way. Very excited about that project. So we will see you all tonight on Late Night Crypto Talk. I do have some other articles I can go over. I will share this one that popped up about the NFL players. You know, they got money. Here's my only problem, though. They have money, but are they educated in crypto? You know, do they know about it? They got the money to invest in it. So you guys have a great day. Late Night Crypto Talk later on tonight. Bitcoin Brandon out. God bless. Bye-bye.